Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Oracle's Q4 2025 earnings are just out, and here's what you need to know.
Today, we're diving deep into Oracle's Q4 2025 earnings, dissecting the numbers to understand what they mean for investors. Cleo, what were the headline figures?
Revenue came in at $15.903 billion, a solid 11.3% jump year over year. EPS, that's earnings per share, essentially how much profit the company made for each outstanding share, hit $1.19, representing a 7.2% increase year over year.
So top and bottom line growth, a good sign. Cleo, based on these initial numbers, was this a strong quarter for Oracle?
Overall, yes. Net income reached $3.427 billion, and with an operating income of $5.109 billion, they achieved a 21.5% net margin and a 32.1% operating margin. This indicates they're keeping a healthy portion of every dollar earned as profit, suggesting strong operational efficiency. Their management certainly seems optimistic, projecting substantial growth in FY2025. Driven by their cloud offerings.
Interesting. What specifically did management highlight?
CEO Safra Catz anticipates dramatically higher revenue growth rates in FY26, fueled by cloud services. They're projecting a jump in total cloud growth from 24% in FY25 to over 40% in FY26. Larry Ellison, chairman and CTO, emphasized the triple-digit growth potential of their multi-cloud offerings, particularly with services running on Amazon, Google, and Azure.
So, cloud is clearly the growth engine here. Let's break down the revenue streams. What's driving this top-line growth?
Cloud services and license support led the charge, with $11.698 billion in revenue, a 14.3% year-over-year increase. This underscores the ongoing transition to cloud-based solutions. Cloud license and on-premise license revenue reached $2.07 billion, growing 9.2% year-over-year, while hardware revenue saw a modest 1% increase to $0.85 billion. Services revenue actually declined by 1.8%, landing at $1.348 billion.
That decline in services revenue is interesting. Any insights into what might be causing that?
While the specific drivers aren't detailed in this report, the focus on cloud growth suggests Oracle might be strategically shifting resources away from traditional services towards higher-margin cloud offerings.
What's the geographic breakdown of this revenue? Any particular regions standing out?
The report provides the revenue figures for each region, with the Americas contributing $8.945 billion, Europe, Middle East, Africa at $3.539 billion, and Asia-Pacific at $1.803 billion. However, year-over-year growth rates for these regions aren't provided. While we can't pinpoint regional growth drivers with the data provided, the strong overall revenue growth of 11.3% suggests broad-based strength across their key markets.
Now let's talk about profitability. How efficiently is Oracle converting sales into actual profit?
As mentioned earlier, the operating margin came in at a healthy 32.1%, indicating that for every dollar of revenue, they kept 32.1 cents as operating profit before interest and taxes. The net margin of 21.5% is also solid. That's their take-home pay after all expenses are accounted for. For retail investors, these margins demonstrate effective cost management.
And what about cash flow?
Operating cash flow, the cash generated from the core business operations, was an impressive $20.821 billion, while free cash flow, the cash left after capital expenditures, wasn't provided in this release. It's a crucial metric to watch for in the full financial statements, as it represents the cash available for things like dividends, share buybacks, or further investments. Oracle's cash and equivalents position is strong at $10.786 billion, providing a substantial financial buffer. Finally, shareholder equity stands at $20.969 billion, representing the residual value of the company after all liabilities are paid.
So, what does Oracle's future look like based on their guidance?
Management is exceptionally bullish. They're projecting a significant acceleration in cloud growth, targeting over 40% growth in total cloud revenue for FY26, up from 24% in FY25. Specifically, they expect cloud infrastructure growth to surge from 50% to over 70%. This aggressive growth projection is backed by their expanding multi-cloud and cloud customer offerings. They highlighted triple-digit growth potential for multi-cloud revenue and are investing heavily in new data centers. They also mentioned that remaining performance obligations, RPO, which represents contracted future revenue, reached $138 billion in Q4, a 41% increase, further supporting their optimistic outlook.
So, Cleo, given everything we've discussed, what's your final takeaway for investors on Oracle?
Oracle demonstrated robust financial performance in Q4 2025, driven primarily by the strength of their cloud offerings. The company's strong profitability and cash flow generation provide a solid foundation for future growth. While competition in the cloud market remains intense, Oracle's strategic investments and aggressive growth projections suggest they are well-positioned to capture a significant share of this expanding market. However, investors should carefully consider the potential risks associated with the rapid pace of technological change and the competitive landscape.
That's all the time we have for today's earnings analysis. Thanks for joining us on StockAnalytics.ai.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis. Until next time.